Hello everyone, this is Ming Jong. Welcome to today's market analysis for the S&P 500 E-minutes futures for the session of 4th of September. In this video, I am going to show you the market recap during the last session and also 3 trade reviews in the 3 minutes time frame, which I will include the entry, the exits, and the rationale behind. So one trade happened during the London session and another 2 trades happened during the US session. So going forward, I will also cover the bias, the key levels, and also my trading plan for the session later. All right, so let's just get started. So as we can see in this daily chart, so yesterday was very interesting day. And this is the change of character bar that I have been talking since quite a few days ago. I think I do talk about that probably in this bar as well. So anyway, from this picture alone, definitely this is the largest reaction that we have ever seen. It's very similar to this kind of the reaction back in June. But if we compare it to the supply level, still is not exceeding the huge bearish bar that happened in June at this spot here. But based on the supply level and also the spread alone, definitely is comparable. And I think we should see some kind of the stopping action for the uptrend for now, a temporary pause of this uptrend. Anyway, I will dive in a bit more detail in the later part of the video. But first of all, let me just get into the hourly time frame and let's talk more about the session yesterday. So if you recall in my video yesterday, I do talk about the overbought scenario, and also I have another supply line which is highlighted in brown color here, somewhere close to around 3600 level. But certainly if we just base on this uptrend channel or the up channel alone, then definitely this is a overbought situation. So we hit the overbought channel and consolidate a little bit here, and followed by sign of weakness happened just prior to the US session, and these 2 selling bar here with the huge supply come out. All right. So in terms of the supply, I think there is no doubt definitely a lot of the supply together with this kind of the bearish results. So definitely this is really the change of character bar that I was anticipating that will actually stop this uptrend temporarily for now. And in terms of any bullish sign, well, apart from this uptrend channel, the demand line is not breaking the demand line decisively. So I think this could be the only bullish sign that I just thought about. But don't forget that the reaction is just started. If we can't hold at this current level, then there will be definitely further weakness going down in the second leg or even third leg. All right, anyway, let me just get down to the smaller time frame. My preferred time frame is the 3 minutes time frame for intraday trading. And yesterday I had 3 trades in total. So one in the London session, about afternoon in my time zone, and the other 2 trades happened during the US session. Take the chance to ride the sharp downtrend. But first of all, let me just get into the detail of the London session trade review. So just prior to that, we can see that, so here's a context. We have a uptrend, a very trendy day the previous day. Subsequently, we have this kind of the change of character and followed by this downsloping trading range. So this is a downsloping trading range, and it's just hit the channel overbought here, very close to 3600 level. And subsequently, I do talk about potential long scenario when the price actually tested the last hour bar. So the last hour bar actually is somewhere around there, if I remember correctly. The level that I am watching was around 35.66 or 65. So you can see that here is the trade here. So that's the trade during the European London session. That's around 2 p.m. my time zone. All right, so let me just delete this and zoom in a little bit more in order to see the volume. All right, so here's the plan. So as you can see, that is 35.66 here. We nearly touched that, but I think this is close enough. So firstly, just based on this down channel alone, so let me zoom out a little bit here. So this is the down channel. So down channel, down sloping channel, or down sloping trading range. So definitely it's kind of a little bit of the mimic like the spring type of trade. So we have a reaction here followed by a test and another test at a higher ground. So let me just walk you through my trade here. So first of all, we have this reaction, and that actually comes with an increasing of the supply level, and subsequently the test, despite that having the decreasing supply level, we actually hit a lower low here. So this is actually a lower low. So not really my preferred entry. So what I would like to see is actually a higher low with decreasing of the supply level, which actually happened in this rally here, sorry, this reaction here. So just right after this reaction with a decreasing supply and also higher low, I enter right after the close of the reversal bar, this bullish bar here. All right. So with the anticipation of the test of at least this swing high or this swing high here. So subsequently, you can see that we have another reaction down. So here comes another reaction, which is not that threatening because my stop was very far away from the action here. So my stop was somewhere around here, just slightly below the lowest point of the swing here. All right. So right after that, we have seen a nice rally up. So my strategy to take my trade or to close my trade is to trail the stop. So pretty much that until this point, I just trailed at below this bullish candle. So this bearish candle here actually just stopped me out, and with a reward to risk ratio of slightly more than 1. I think it's around 1.2 or 1.1. Yeah, 1.2. So this is the first trade. And subsequently, actually my bias was still up. I thought that we might have another chance to play at this 35.66 level, to have another bounce. But look at what happened next. So instead of having a bounce or a spring type of the trade, which is a false breakout, so now the stories change. So we have a sign of weakness. So this is actually a sign of weakness followed by inability to rally up. So you can see that each rally is getting a lower high, another lower high. So until this rally here, so that rally has actually going up a little bit, barely tested the first swing high here, but definitely is a localized upthrust for the prior swing high level. So you can see that from this point onwards, a sign of weakness followed by this type of the down sloping trading range, which is another weakness by itself. But I still wasn't sure that whether it will reverse right after the initial jobless claim, because yesterday was a Thursday, so definitely there was a one of the important news, which was the initial jobless claim. So I did not do anything. I just wait until we have seen the reaction right after the news. So here is, I think this bar here is about 8:30, just by guessing around with the high spike of the volume here. So I think that's where the news comes out. And subsequently, we have a rally up, but look at where the rally actually stopped here. So let me just clean this. So you can see that the rally actually created a localized upthrust. So if we just draw a line here, this is a upthrust. And this bar here actually presents with a lot of the supply level. So we have seen the supply increasing here. And subsequently, we have seen this rejection tail as well. So I just shorted at that point. So I'm planning to hold through the session. And just right before the US opening, so which is here, I just close out partial of my position, I think, which was about half of my position. So I just close it right at the opening, just before the opening, about 9:27 p.m. my time zone, because during the opening will be very volatile, and I just want to lock in my profit. I think I will get a reward to risk ratio of around 1 only, but still I left with another half size of my position, which I intend to keep to see what happened during the US session. So you can see that we have another consolidation, a very slight consolidation here. So this is the consolidation, and we see some of the rejection tail. But anyway, we've seen that there are a lot of the volume generated here. So I just keep that trade, that half size of my position, and also open up another new short position right after the break of this localized little kind of the structure here, little trading range here. So after the break of this trading range, after close of this bearish bar, I just enter another short position, and subsequently I just ride this downtrend. So that was quite a profitable trade. So you can see that with the half size of the position, the reward to risk ratio is about 13. And with the newly open position at a later time, taking the breakout trade is around 5.4. And until this point, I still trailing my stop and actually got stop out somewhere around here with the the rally, technical rally right after the oversold condition. So if we just draw some line here and another line here, you can clearly see that this bar here is just went into the super oversold condition with the spike of the volume. So that's the rally comes after. It's definitely a technical rebound. All right, so that technical rebound actually just take my trailing stop out and lock in all my profit. So these were the 3 trades review. All right, so let me just get down to the hourly time frame, and let's talk about the current situation and what we can anticipate from here on. So let's just take a look here. Okay, so as we can see, this hourly chart, the sharp sell-off actually just stopped somewhere around the demand line. If we look at the dark channel here, so this is the demand line. Touch 1 times, 2 times, like 3, third time. So this is about the 4th time, and currently is rebounding. Not sure how far it will go, but definitely the immediate supply zone will be these 2 bearish bar here. So this is the first bearish bar, and that's the second bearish bar. Of course, that's the third bearish bar also counted as well. So definitely a lot of the supply around this zone here, and currently we're entering into this and testing the supply zone, and let's just see how far it can travel. And my bias is still to the short side. I'm looking to short upon rejection within this supply zone. So if it's showing some kind of the reversal, then I could just enter another short trade to ride it another leg down, hopefully. And the immediate support level will be, let me just use a daily time frame, because I think that will be more significant to look at the daily chart. So if you look at this previous all-time high here, so it's actually the previous swing high, is around, I think it's around 3397.5 or 0.75. But anyway, just take it as 3400. So 3400 level will definitely be a logical place for some support to come in. And actually, if we take a step back, have a bigger picture, then this is not too bearish, since we have this kind of the run up and we just break out. So this is a breakout of this prior all-time high, and have this kind of a sign of strength rally with a bit of the climatic run, hitting the channel overbought here. And right now we just coming back, and that could be just a test of the resistance turn support level, and maybe we can just go into a consolidation. Maybe it's an apex, maybe it's just our typical horizontal trading range. And another level to watch, if we really have some kind of a bad news to hit us, then I think this orange line here, about 3200 or 3230, if I remember correctly, will be a good supporting level. So if 3400 cannot hold, then the next support level will be the 3230. So hopefully this level or this zone here can provide some kind of the support. So overall, for the long-term wise, if you do position trading or investing, I don't see any damage yet. But for swing trading, definitely, I think this will lock in a lot of my trades to take some trades out, lock in the profits. So in terms of the magnitude of this, I think it's still not too bearish if we compare it with the big bearish bar in June. So in terms of the spread, so definitely is lesser. So in terms of the supply level, it's still slightly lower. So if we can just rebound it at this level, I think this could be just forming another reaccumulation range. I think it would be good if we just take a quick look at the Nasdaq, because I think Nasdaq actually paints a different picture, since it is a leader on the way up, and on the way down it actually leads as well. Let's take a look here. You can see that in terms of the spread, this is huge. So yesterday bearish bar is the biggest. If we compare it to, well, even this one is still a lot bigger. Even the bearish bar in June still, I think, is larger than the one that we have seen. So definitely is comparable to the sell-off during the COVID-19 sell-off. So since the bottom in March, I don't think we have seen this kind of the big bearish bar. And if we just compare the supply level, definitely it just overtake this. So that's the supply level is the highest that we have ever seen. So what does it mean? Well, I don't know at the moment, but I just suspect that it could be just a rotation from the Nasdaq into other type of the stocks, probably in the S&P, Russell, or Dow Jones. So that's just my my view. But in terms of the S&P, currently we still have an important level at 3400 to watch, to see whether we will have another leg down to test this immediate support level, and to see if we can bounce up from here. Alright, so this is the end of the video. Hope you enjoyed it and get something useful out from my video. If you like this video, just click like and also hover to my name or picture to follow me. And do remember to subscribe to my channel so that you get instant notification of my future video ideas. So as usual, if you have any kind of the comments, suggestions, or trade ideas you'd like to share with me, feel free to comment it below. I will reply to you. Thanks for watching, and I will talk to you soon. Bye.